Hello and welcome back to Roguefx. Today we're going to go over order flow 2.0. This is pretty much going to be elaborating on what we were going over in the first course, but a bit more in depth. We're going to add a bit more technical value to what we were previously mentioning, as well as, we're going to be trading or observing a live chart, a live Forex chart in GBP JPY. I'm not sure it matters because every single pair, they move the same way, right? Disclaimer, every pair, every indice, every different currency there is to invest in, they have their own market structure, their own way of doing, the way of being. Understand every move, every range, every impulse is unique within itself. However, market structure at the end of the day is definitely market structure. The reason that we are implementing trend lines is so we come to a better understanding of why price stops at a certain price level, how that correlates to order flow, how we could recognize when a QM is valid, and understand when it's safe to take protected highs as well as protected lows. Today we'll be going over 3 different trend lines. This is going to help us understand and build the actual confidence in order to trust our strong highs as well as strong lows. Of course, increase our confidence in determining whether price is going to continue higher or continue lower. As you can see, we already have our structure pretty much marked out, at least on the higher time frame or smart money point of view, which is pretty much the zoomed out portion of market structure, right? We can obviously determine market structure present time, right? So we have a higher high, we have a lower low, we have a lower high. We can determine price like that, or we can zoom out and determine price from a more broader perspective, and what I like to call smart money point of view, where we can understand the expansions, corrections, and overall expansion towards external range and internal range, or as well as internal range liquidity. We're going to start with this bearish trend line to the left and then kind of just work our way to the right. Before I get started, if you haven't already, hit that like button, subscribe to the channel because we do post daily. And it only means that you can stay up to date on our videos. Ring that post notification bell, receive notifications every time we upload. I do appreciate the love and support. I believe we just hit 650 subscribers, which is actually crazy because, I'm not going to lie, a couple of months ago, I just started and I didn't think I was going to be getting any kind of attention. So I'm very grateful for the individuals that do see the value within my personal strategy. This is Roguefx, and without further ado, let's get started. So as you can see, we have our trend line, right? As you can see, price is pretty much well respecting every lower high that is, I guess you could say, presented. And as soon as price, breaks this trend line, what does that mean? Well, that's going to tell us that the range or the bearish trend is currently over and price is looking to reverse or maybe retrace a little bit higher, reach for liquidity to the left, identifies any kind of supply level as a POI and continue lower or higher. It really just depends on your market structure, right? One thing I want you to understand when we are talking about QMs, a Quasimodo or a for short QM, is that in order for, I should say, a higher low or a lower high to be valid or confirmed, price has to do a specific amount of things before it is ready to expand to lower prices. Price has to create an expansion, correct, and then expand to the lower prices or higher prices. It can definitely be vice versa. Now, I know you're kind of just like, well, this is just a regular pattern. How am I supposed to resonate with this on any kind of, physical plane? It's literally just a scribble. But if you really pay attention to what is actually being presented within this pattern, you can see that we have an expansion, retest, we have a failure to break, the previous low, and then we have a liquidity grab, and then expansion to lower prices after that. So what took place whenever this price was in this consolidative or corrective behavior? Price took out liquidity and broke structure, whether that be a choke or an actual break of structure of previous internal range liquidity. Price all in all drew to lower pricing. So what I want you to understand pretty much is before you are to determine where price is going, your job is to wait for confirmation. Wait for your liquidity grab, break of structure, retest. And at that point, it's your choice to take this choke as maybe an inducement, right? So what is our automatic target? It's going to be this low. Take your partials, let the rest go. If maybe it decides to stop you out at break even, okay, cool, that's fine. Where is price determined to go now? Was this an impulse? Was this a mitigation? If it was a mitigation, then okay, we have our range. Strong low, weak high. This high is weak. All we need is a retest, liquidity grab, continue. That's a target. Of course, easier said than done, but again, of course, anything repeated enough times will become second nature, right? So what are we looking for? A liquidity grab and a break of structure. That is what determines our bias. Understand that when we have a retest, right, and then we have another actual break of structure, right? So this would be considered a choke. This would be considered a break of structure. That just confirms our bias all the more. What are we looking for? A retest of internal range liquidity, maybe 50, take out internal range liquidity in this inducement, or we can look at it to fill in 100% and mitigate a POI from all the way up here. We still target the lows. It's the same thing, target external range liquidity. So with that being said, we're going to transfer this knowledge to the actual live charts, see how many times we can actually enter these markets within the same range before the overall expansion towards the lows. So as you can see, we have our latest strong high. This is our latest protected high. How do we know? Because to the left, we have what? A trend line, which equates to what? Liquidity. What do we have after that? We have a break of structure. This would pretty much represent our choke, as well as another structural low. So on maybe the lower time frame, so like the 5 and the 1 minute, this would be our break of structure. What do we understand now? We understand that we have our range from this high, this strong high, protected high, to this weak low. How is this weak low confirmed? Price performed a liquidity grab and a break of structure. It may be, of course, on the lower time frame, maybe the 1 seconds. However, what you need to understand is it's there, it's valid, and it works. So I don't know. I don't want to say take my word for it. I want you to go on the charts and actually see this for yourself. However, I mean, it's in front of you right now. So in a way, you're kind of doing it. So again, strong high, weak low. Price reaches for liquidity, which happens to be what? Slanted highs. Liquidity grab, that is our first, or that would be our protected high for this particular range. We can definitely enter right there, leave our stop above that structural high, or, definitely learn to respect your fib. Where do we target? Well, we zoom out to smart money. What do we see to the left? We have slanted lows, maybe even a trend line. We stretch it out. We have our partials take profit. That's already 5%. 5% just for just understanding how to trade, period. That's all I really need to help y'all understand is when you know how to trade, you know where to take these partials. You understand where price is pretty much aiming, or where it's going, or where it's drawing to before it even happens. And that's just one obstacle. What happens next? Price retests. Price provides a choke as well as an actual break of structure. We retrace on maybe like the 5 minute. Mind you, this is the 1 hour. We retrace on maybe like the 5 minute, take out liquidity, which happens to be what again? A trend line, a slanted high. Now that we understand where our liquidity is, we have all right to enter because we understand where the protected high is. Where do we put our stop? I'm going to put it above this rejection block to the left just to be safe, as well as respect your fib. We target the same low. Understand how this trend line never gets broken. Why? Because price is predetermined. Even if it's as messy, or to a lot of people, it's just hard to read. It's not necessarily hard to read. You're just looking for the wrong things. Even on the seconds time frame, this would be pretty much seconds time frames price action, which this would be seconds time frame price action. As you can see, price performs its break of structure, retest, took out internal range liquidity with this single wick. So this would just establish our high. How do I know that this is a liquidity grab? Well, if I zoom in, if we take the time to actually understand what's happening within this price action, you can see that even the tiniest wick could still act as liquidity grab. At that point, price continues lower, provides a break of the overall equilibrium of this rejection block. So, right, so if I drew my fib and obviously measured this rejection block, we had an official break. Even a wick counts as a break of structure, or maybe in this case a choke. Price retest, reaches for liquidity or internal range liquidity, which happens to be what? In this case, our internal range liquidity is going to be the rejection block's unmitigated wick, right? It's going to be right here, right? So that's as tight as your stop can possibly go. And for me personally, I'm going to put my stop above our initial breaker, right? So this is going to be our imbalance, but we're going to put our stop above that. And that would leave just a crazy opportunity for what? For partials, for 3% partials, as well as price continuing lower, breaking our obstacles, providing us with yet another opportunity to enter price or enter an execution. What happens right here? Price impulses down. I'm gonna say, and I'm just going to assume, right, because we already have our bias. So our bias being bearish, obviously, price establishes a high for what? Liquidity. If I were to zoom in on this corrective behavior, you can definitely tell that price took out a slanted high, which would obviously measure out to a liquidity grab. Price continues lower. If I measure this bullish pin bar, you can see that we actually broke the one, which would be what? A structural low within this body, so choke, as well as this wick, so break of structure. All we need to do is what? Retest, reach for liquidity, which happens to be what? Unmitigated wick. We continue to lower prices. And as long as we are above our protected high, which would be what? Price established a high, and this is going back to what? Open, low, high, close, open, high, low, close, i.e. candlestick structure. If you do want more information on that, I don't have them both. I really just have the bullish version, but it's going to be on our previous video on the power of three or accumulation, manipulation, distribution. We target where? We target our partials, which our partials would be 2%, and we continue towards lower prices, which would be obviously our demand zone. And if you want, you can look left for what? Internal range liquidity. How do we know this is internal range liquidity? Well, if this is going to be our protected low, then obviously above that we have to have some type of liquidity or inducement. And what makes this a liquidity or an inducement is the three candle formation that it's forming: 1, 2, and 3. It's just about using your imagination, guys. Don't make this as hard as it really is. Just understand that under every POI or above every POI is a form or an act of liquidity inducement, right? It induces traders to do the wrong thing. It induces traders to obviously buy from right here because they think, oh, this is going to be a demand zone, which is clearly not. It's clearly, bearish. It's going down, right? So that's how we understand that. Anyone who enters in this demand zone is obviously stopped out. Anyone who understands, obviously this trading course, this channel's trading strategy, Roguefx trading approach, understand that we are entering where? We're entering under this unmitigated wick, because if we honestly look above this three candle formation or below this three candle formation, you can see that we have what? Candle formation. That's a structural low. And above that is an overall, it's a block. It's an unmitigated wick. It's a rejection block, leaving what? An imbalance. Stretch it out. What does price do? Exactly. Moving on to our second trend line. This is going to be yet another bearish trend line. As you can see, and this is without, we don't even need the trend line for real. A trend line is just to help you guide your steps and help you understand the actual trend of the market. And of course, if the trend line ever gets broken, what does that mean? That means the trend is over and we're looking to what? Reverse, right? So as you can see, as we zoom into this first actual range and identify, the order flow within these trend line or within this trend line, you can definitely see how price, kind of started off. Price definitely performed what its liquidity grab of a structural high, broke structure, or pretty much provided a choke retest, mitigated I guess you could say, unmitigated POI to the left, right, as you can see right here, and continued lower. What I want you to realize is this small range, how this small range, this, I want to say, 33 pip range provided well over at least 10, 15 times its actual size. That's how volatile these markets can get, and that's what you want. A lot of people are afraid of volatile markets. They don't understand that's where the big money is. And if you understand how to actually get in, how this actually works, you can understand that price does what? Takes out internal range liquidity, which happens to be what? Slanted highs. We have a liquidity grab, we have a break of structure. This would be a choke. We have a continuation, retest, and yet another expansion to its lower prices, and we provide a break of structure. At this point, we have a choke as well as a break of structure, and we have liquidity being taken out. This becomes what? Our newest protected high. Price is now in the break of structure phase. At this point, where is our POI? Our POI is right here. It can't get any simpler. That's our POI, because that's where, at an extent, that's where price is. Price broke structure. Okay, cool. Our range is now confirmed. What are we looking for now? We're looking for what? Liquidity grab, retest, retest. Understand that liquidity grabs, yes, they take out liquidity, but they're also there to establish liquidity for later on when price, obviously continues lower, right? So we have what? A retest, retest. Say you missed this one, in being the actual liquidity being displayed or established, you missed the retest, but you saw this one right here, right? You saw how price was confirming its bearishness, and you entered on bearish body candle, right? So this is going to be a doji, but it's going to be bearish, and obviously the volume is going to be in the bodies of these, or each candle, right? And then what do we target? We target our most recent low, and this would be what? Well, we took out internal range liquidity being, or we don't necessarily have to take out internal range liquidity, because price is taking out internal range liquidity regardless, whether it's on this time frame being the 1 hour, or it's on the 1 minute on the lower time frame. It's taking out liquidity. However, it's important to know that price at times is going to establish liquidity for later on when it decides, or if it decides to come back and obviously fulfill that imbalance in price or inefficiency in price. Price takes out internal range liquidity. What's next? External range liquidity being what? At this point, as you can see, we have what? A 3 candle formation. It's pretty simple. We have our target as well as maybe an imbalance above that, right? So we have yet another obstacle, which in this case, this obstacle held. Now, as long as we are as long as we are below this trend line, which being a bearish trend line, we understand that even if price is impulsively rallying higher, we are still bearish. We are still looking to look for only bearish setups. And of course, you can trade, you can ping pong these, bullish counter trends. Yes, of course. However, understand that don't be, upset when it decides to take out internal range liquidity right here and break you even, or at worst case, stop you out, because you're going against the trend. So people that actually trade counter trend, they're actually insane. Like, they're crazy. You're risking your money, and it's honestly riskier to trade against the trend than with the trend, obviously. It's just simple logic. So if we be patient and understand what's happening within this market, you can understand that this is a block. This is a block. This is a block. This is a pin bar, another block, a bullish block, indecision, and another block. The thing about these blocks, and something that you can actually refer them to as, is think of it as all of them being very significant candles, and they can just act as like trend line. Pretty simple, right? Just to keep it as simple as possible, that's just how I do it. Price retraces, takes out internal range liquidity, establishes a strong high as soon as we break a structural low, being what? A choke, right? Price continues lower. If I take my fib above, or I run my fib along this counter trend or bullish counter trend, you can see that we broke, yes, a choke as well as a break of structure. It broke on a maybe like the 15-minute low, which is honestly relevant. If I look left, you can see right here where this breaker is actually being broke. So at that point, what confirms our bearishness, right? Whether it goes down now or later, understand that that just confirms that our overall trend is what bearish. So in this case, price is going to enter a consolidation. As you can see, price ends up running previous liquidity. We ended up providing a a choke as well as a break of structure. If we took out external range liquidity, what's next? Internal range liquidity. What would internal range liquidity look like? It looks like a 3-candle formation. It looks like a structural high, maybe even equal highs. Maybe it looks like a price rebalance. And if you're really patient, always trust your stops, of course. Always trust your stops. And that leads to what? A 1 to 5 on the first obstacle. Take your partials. Whether you do a standard 10 lot, whether you do a 5 lot, take your partials. As you can see, after partials has been taken, price provided our choke or our first break of structure. Price continues lower, ends up breaking this rejection or bullish rejection block low, which happens to be what? If this is our fib, 1 equilibrium 50 fair value gap, and yet another 1, what is price actually doing? Price is breaking structure. At this point, we understand, or we pretty much can understand where our correction is pretty much about to start, right? So what does price do? Retest, takes out internal range liquidity, which happens to be 3-candle formation. We break structure, provide a choke, continue to break structure, provide a break of structure. What's the only thing left to do? Take out internal range liquidity, which happens to be what? In a lot of cases, it's going to be this inducement. Price left its footprint. We break structure. What's left to do? Retest and reach for liquidity, which happened to be an inducement. That's going to be our POI, as small, as little as maybe a straight up line. We put our stops above price rebalancing. Where do we target? Overall lows. I'm not gonna say overall lows, of course. However, of course, demand zone in general. And that's, of course, if you're really good, you really understand how, your trading plan, of course. However, if you are a beginner, I urge you to just target the next obstacle, which happened to be what? A price imbalance. Price broke structure, or in this case, a choke, and continued lower. And I'm pretty sure broke another low to the, like, as you can see, this low right here had been broken, even if it's just by a wick or a tick. What does it do? It confirms our bearish trend. As you can see, price performs what? Yet another liquidity grab of what? A 3-candle formation, or maybe slanted highs, or maybe price performs a rebalance. Draw your fib, and of course, you don't draw fibs for no reason. You draw fibs for it to respect your stop loss. That's a 1 to 8, and we're targeting the demand zone or price rebalancing. And what does this do? It makes price efficient again. Now, the last trend line we're going to be going over is going to be bullish. It's going to be a steep uptrend. I want you to understand how the trend line that is provided, it never is broken. All you need is 2 touches. So even if the touches are, so you have your strong high, or I'm sorry, in this case, a strong low right here. Maybe, to an extent, adjust it and make it make sense, and if it doesn't work, obviously you have the wrong range, and that's fine. It only educates you. It only helps you understand what you're doing. Not necessarily wrong, but you need to make mistakes to understand what you need to do right. So to an extent, price provides what? A liquidity grab, a break of structure, and obviously retest, and that's all happening within this one rejection block. Understand that these rejection blocks are only price imbalances, attempting to rebalance itself. So in that case, if I draw my fib, what is price doing? It's rebalancing itself, providing price equilibrium, retesting the fair value gap, doing what? Taking out liquidity, providing our choke, or in this case, taking out liquidity, which would be slanted high, or maybe a trend line. It really just depends on what you see. But either way, it's a choke Price retest, takes out liquidity again because it's doing what? It's taking out internal range liquidity. At that point, price breaks structure. It doesn't necessarily have to break a major high to continue higher. Now, be careful with that because a lot of the times it's going to, obviously continue lower. But in this case, price was bullish. Price on the higher time frame, it was drawing towards higher prices. So I'm not gonna say you got lucky, but understand that when you understand or when you are able to comprehend a protected high, understand that you have the range for either the week, the day, the hour. You have that range. So of course, it is your right, right? It is your right to be able to enter upon these higher lows or these protected highs with the utmost confidence, right? Because you understand what's happening. You understand that price is what? Breaking structure, which obviously insinuates a bullish run or bullish price action. What does price need to do at that point? Retest. What does price do with that retest? It establishes what? A footprint or an inducement, or better yet, it establishes a slanted low. What does it do? Draw towards that liquidity grab. What do we have left? Or I'm sorry, what do we have to the left? We have an order block. This is understanding order flow and how it delivers, right? How it provides a high, or of course vice versa, provides a low, retest and rebalances on yet a, obviously unique order block within itself. Whether it's a tick, whether it's a wick, whether it's a block, breaker, rejection, doji can't, however you want to price indecisive candle, understand that it's the same thing. Price continues higher. We provide a choke, retest. What does price do? Leaves a footprint for later. Just mark it up just for later and understand that it might come back. Price continues higher. We break what? A trend line as well as a break of structure. And what's left to happen? What's left for us to expect, right? Only thing left to do is retest, take out internal range liquidity, which happens to be what? Structural low. However, below that, we have an inducement. And to the left of that, what do we have? We have a price rebalancing. So, and of course, we have a rejection block that is bullish, that's perfect for a demand zone play. We continue higher. This ends up a protected high, as well as the one before that I didn't mark. However, this is understanding that this is definitely, like, it's unlimited, and you really can't. It's something that comes with time, right? It's not going to happen overnight. It's not even going to happen in 6 months for a lot of people. However, when you understand how price delivers itself, when you understand how compound interest actually works, this can definitely become a work of art and something that, it's something that you can carry with you throughout your life and make money and make, I'm not gonna say a lot of money, but you'll be well off. You won't be, you can definitely get to where you want or feel like you want to be again with time. However, understand that money is not everything. Family, love, light, God himself, herself, however the case may be, way more valuable than any kind of material aspect on this earthly plane. When you understand that, that's honestly when things kind of just become attracted to you, because it's not necessarily you're chasing anything. You're not chasing price. You're waiting for price to come to you because you understand that. Like, look how many we already entered: 1, 2, 3, 4, 5, 6. This is 7 different opportunities. Where's the need to trace price, right? So what happens after this? Price provides a what? Liquidity grab. Even on the lower time frame, continues higher. We ended up breaking a choke as well as a break of structure. Probably not on this one. However, it did come back, take out what? An equal high. Retest, continue lower. That establishes our protected low as well as our weak high. Price retest, takes out internal range liquidity. We failed to break this high. We failed to break the low before that. However, it doesn't mean we cannot still get in it. We can get in this strong low or protected low and target this unmitigated wick, most definitely. We could get in this weak high and target this unmitigated wick, most definitely. Now, it's only 42 pips. I'm not gonna say 42 pips. Anyone would be grateful to get, right? And this one is 30 pips, which is, it's not bad, but it's, like I said, it's something. What does price do? Retest a breaker to the left, right? So if we have a block, what is a refined version of any kind of block? It's going to be a breaker. So price obviously found that to be a demand zone. We failed to break the high before it. failed to break the low before it, which again, this is just a small consolidation on the lower time frame. You can trade this on the lower time frame. However, I prefer to wait. You can even hedge, right? You can obviously catch this high to the low while still holding all these longs. Understand it's just more risk, because if price decides to stop right here, you're going to be obviously break even or stopped out. But I mean, that just comes with it, right? So understand that is a possibility. But again, as you develop your skills, it becomes less and less prevalent. Price reverses down or retraces down, takes out internal range liquidity, which happens to be what? This structural low, this quote unquote footprint. What does it retest? Price seems to have used this unmitigated wick for the same, it literally just used the same demand zone as a strong or protected low, which is perfectly fine. It's possible. And if anything, it just makes your job that much easier, especially when you're scaling, right? You're scaling these markets, and you want to have, to start off with maybe a 60 pip run or maybe a 50 pip run, and obviously secure your partials. Obviously be smart, right? If you know that your external range liquidity is, or internal range liquidity is right here, hold and, maximize your profits as much as possible. So of course we obviously we can definitely take these two, respecting our overall stop loss and targeting partials, as well as the next obstacle, which would be what? An inducement, right? Because what's saying price won't just mitigate this and then continue lower? It didn't, but that's what I'm saying. When you understand how fractal these markets are, what happened? Price provided a strong low, weak high, retest, took out internal range liquidity. Yes, at that point, yes, this is a strong high, but as soon as price fails to break this high, what if price is not going to go up? Where is it going to go? It's not just going to stand, and it definitely can just consolidate, just like it did right here. However, what is the price going to do? If it's not going to take out the highs, definitely go to the low. And what's at the lows? If you want to back this a little bit down and stretch it, what does this become? It becomes an equal high. And if it doesn't become an equal high, it really just depends how you see it personally. Maybe a slanted high. Maybe it becomes a breaker, right? This is going to be your demand zone, right? So an inducement, and then it, fails and takes out that inducement, and that's where you would find a perfect opportunity for a re-entry. It doesn't necessarily have to be along the trend line. That's another thing you should probably note down. It doesn't have to be along the trend line, which is good, because if anything, it enhances your ability to trade these markets in a more efficient manner, right? Where do we target? Our next obstacle. So in this case, what would that be? To the left, we definitely have a slanted high. It's internal range liquidity, right? As well as, if we stretch this out, we can actually go a little bit higher. At that point, we are looking at from a 1 to 4 to well over a pretty much a 1 to 10, right? If we're over here, drawing towards our overall supply zone and or order block, right? Because these two blocks, I don't know if you can see it. Hold on, give me a second. These two blocks overall, they add or they act as an overall block. And I'm gonna go ahead and take the wick, because obviously it's pointing down, so I'm gonna just assume on the 4 hour that just acts as an overall block. And if we look left or we zoom out, you can see how price kind of just associates with that price level so effectively. And as you can see, what's happening right here, we have a liquidity grab. Even if it's by a tick, even if it's by a pip, we have a liquidity grab, we have a choke, right, as well as a break of structure that confirms our overall bearish movement to where? Well, we took out internal range liquidity. What's next? External range liquidity. And what's external range liquidity towards the left? As you can see, we have a pair of equal lows, as well as an unmitigated wick, as well as maybe an inducement, a footprint in the market. Price retest, reaches for liquidity, right? So if this is this is acting as a bullish order block, what's the refined version of a bullish or any kind of order block? It's going to be a breaker, right? It's going to be a breaker. So this is where we enter. Obviously, respect your stop loss, right? I'm saying respect your stop loss, because at times you're not going to be able to. You're going to feel those emotions, that worriedness. But when you understand that, what you're learning is the real deal, you can respect your stop loss, and you can obviously maximize your reward and minimize your loss effectively. I hope you guys enjoyed this video. This has been order flow plus trend lines, or in any case, order flow 2.0. I'm going to be going over my Roguefx 1.0 course and adding more of substance to it. I do, have the capability to keep on teaching, keep on, serving the community or the Forex community. I'm going to. However, if you do want to work with me, if you want to learn from me personally, I urge you to hit the link in the description. It's going to be the domain to Discord. It's going to open up a waiting room. I'm planning on running a membership, subscription-based membership, teaching other people how to master these markets over time. This is not for people who want to get rich quick. This is for people who have a passion and who've been doing this so long and they're ready to see profitability. If you haven't already, hit that like button, subscribe to the channel, because it only means that you can see our latest videos as well as it being completely free. Ring that post notification bell because we will be updating or sending out updates about the membership or mentorship starting January 2023. If you feel like that is you, of course, again, I urge you to hit that waiting room. However, I do need to help y'all understand that I will only be taking high ticket clients. I am not here for any kind of low ball. I understand what I bring to the table. So of course I expect nothing but, or nothing less than commitment, Be sure to check out my Instagram at JodyFX00, as well as check out my trading journal, Roguefx Trading Journal. It's going to be a Telegram link in the description below as well. Until next time on JodyFX, I appreciate everyone for tuning in consistently and, riding with me through this journey of, I guess, life. It's crazy how this channel has grown so fast, and it may not seem like a lot to a lot of people, but when you understand that you have the ability to change millions of people's lives, it can be like a bit like overwhelming to a certain extent. And I'm just grateful because all this passion I've put into my actual career, and to see it playing out live and just taking it all in real time, it can get a bit overwhelming, honestly, because again, this channel, this platform, this brand is going to change a lot of people's lives, whether people want to realize it yet or not, right? Because it's inevitable. This is how you trade Forex. Whether you choose to realize it or not, this is it. This is all you need. When you have this mastered, you're good for life, and I feel like that's how life should be. At times, I'm just like, man, why am I, why, you feel me? Why am I doing all this that I don't want to do? Why am I paying attention to all this that I don't want to do, that I know for a fact does not resonate with me anymore? And I know there's a lot of people who feel the same way. However, they feel stuck because they're being given the information that's not necessarily wrong. Of course, it may work a few times, but is it consistent? Is it proven? And if it's proven, okay, it may be proven for that person, but how are you going to implement it within your own strategy and make it completely yours? Until next time on JodyFX, y'all have a good night.